Hello and welcome. Thank you for joining us in this webinar. I'm Nicole Aubrey, the Head of Wholesale Distribution at Associate Global Partners. Today we have the pleasure of speaking to Trent Larcombe, Portfolio Manager at Vinva Investment Management, to discuss the Vinva Global Systematic Equities Fund. Before we begin, some brief housekeeping and a message from our compliance team. Firstly, this is a live and interactive session, so we'd love to hear from you. If you have any questions that you'd like us to address, please submit them via the question box in the control panel on your screen. We'll endeavour to get to these questions towards the end of the session. Please be aware that this session will also be recorded. Secondly, this webinar is for educational purposes and of general nature only. It does not constitute personal advice, it must not be acted or relied upon, and the presentation is not an offer, recommendation or solicitation. Trent, thanks for your time today. For those in the audience who are not familiar with Vinva, can you provide an overview of the company and what makes your investment process work?
Sure. Well, thanks, Nicole, for your time. It's great to be here today. Yes, Vinva is a global investment management firm founded in Australia. It's independent and privately owned, is Vinva. Maury Waked commenced the firm in around 2010. The genesis of Vinva probably dates back to the 90s, where Maury worked with a lot of his existing colleagues during his days at Barclays Global Investors. Vinva is a market leader in systematic investment management, specialising in long-only and long-short equity portfolios in Australia and in the global equity markets. There's a few things I'd like to discuss with regards to why it works. I think the first thing is that we really rely on the talent and the quality of our team and the market insights that we generate out of that team. So the team creates models and insights for that model, and that enables us to navigate through various market environments. And we try and keep a culture where there's innovation and where we try and continue to be market leaders. Second thing is, on average, we believe that emotions detract from performance. So we have a highly disciplined, sort of data-driven business. And that's important because it takes that emotion and that knee-jerk decision-making element out, which we think holds us in good stand for long-term performance in various market conditions. And I think one of the strengths probably in our styles is around our ability to handle large amounts of data. And we think that enables us to see trends and patterns and mispricing that others mightn't see. And that sort of gives us the timing and the informed element around the decision making that enables us to deliver long-term performance, but also it results in a portfolio that has a lot of bets in it rather than a more concentrated portfolio.
Fantastic, thank you, that's excellent. Now you mentioned that the Vinva team is very long-standing. Can you tell everyone a little bit about the team and the history of you all working together?
Sure. So Vinva currently is 28 in staff. 15 of those are in the investment team. Maury Waked, he was the founder of the firm, as I mentioned, back in 2010. Now, Maury, he was employed back in 97 with Barclays Global Investors. He eventually went on to be the CIO of that Australian business and then eventually went on to be the CIO of the global active equities business. So that managed over $300 billion worth of funds under management across all global markets. And then in 2010, Maury left and set up Vinva. I think the team at Vinva is one that's long-standing and stable, and that's pretty unique, we think, within the marketplace. They've been together and working with one another for a couple of decades. I think the team also has a very integrated team approach. So we really look at one investment philosophy and share it, trying to deliver returns to our client base. And I think that integration comes in portfolio management, in trading, research and investment technology, where we try and interlock all of those to deliver the investment insights in an efficient manner.
Yeah, fantastic, excellent. Now, some of our audience might not be familiar with systematic or quantitative investing. Can you take us through what that means?
Sure. So quant or systematic investing is using advanced models to make and implement investment decisions. So out of that model, we create return stock forecasts for each stock in our universe. And that relates back to a ranking of each stock with regards to forecast return. And then we take that forecast return for each stock and put it into our risk model and our transaction model, and that builds out the funds. So we believe this process, this systematic sort of quantitative process, does remove the emotional bias, and it keeps the process of the investment very disciplined in our approach, which we believe holds us in good stand for long-term performance.
Fantastic, excellent, that's so helpful. And so over the past 25 years, Vinva has created some very sophisticated systems to support the capture and analysis of information to aid the investment process. Can you tell us how much information is held in these systems and how that supports your process?
Sure. So Vinva, back in 2010, when it was founded, spent a lot of time in redeveloping, redesigning the technology platforms to be sort of state of the art. And that has enabled us to be, have the ability to consume, analyse a lot of real-time data, and that then goes on to investment decisions in a timely manner. So we've spent a lot of time continually updating that, spending investments in there and time and personnel in maintaining that state of the art. We realise that technology is fast moving, and so it's important we do that to keep that that platform ahead of the curve as such. And I mentioned, machine learning, language processing and AI. They're three areas that are talked about a lot these days. We've been at the forefront of that area of investing for many, many years, and we continue to be. But as I said, it's a fast-moving world out there, and our ability to stay ahead of the curve with regards to those areas is very important to us. To give you an idea of the amount of data we do consume and analyse, I think on a per annum basis, we look at about process about 160,000 analysts' actions and reports, and about 3 million news items we digest into our model, and about 12 million of our linkage signals impulses. So that is gathering information of other stocks that might affect our stocks in the universe that we invest in. So that's just three examples of how much data we do consume and why we spend a lot of time in making those systems very robust and very efficient from a time perspective.
Wow, that's an awful lot of data. And so you're a portfolio manager for the Global Systematic Equities Fund. This is the first fund that has been offered to the retail market. Can you tell us a bit more about the fund?
Sure. So, yeah, it's exciting. I mean, we've predominantly been in the institutional world, and as you say, it's exciting to sort of release this product as such into the retail world. So this is the Global Systematic investment strategy. It's a partial short strategy, so it has the core long holdings and then just has a small amount of shorting within the fund. The fund looks to outperform the benchmark by 3% per annum and has an active risk of 3%. So within the fund, there's approximately 1,500 stocks in the universe, but at most times we would have about 500 active positions in the fund. It takes it applies a similar investment philosophy like we've done, for decades with our other systematic portfolios, but we obviously apply various signals and apply different logic across different countries and sectors as we're investing into the globe. So it's important that investors realise that. And I think on top of that, how does the fund look at the end of the day? We invest in and have active bets of about 500. And it's important that I mentioned before about the risk model and our transaction cost model, that the resultant effect of putting all these bets on is that we have one where we don't take any style within the portfolio. So we're very much reliant on this bottom-up stock picking process. So we try and neutralise a lot of those styles within our risk model. So what you'd see as an investor is a lot of small bets across many stocks without any particular exposure to a particular style.
Excellent, and that probably answers my next question, which was: does the portfolio or the investment process have any style bias? So I guess the answer there is no.
So yes, the answer is no. So it's designed that way clearly, as I said, from the way we invest. I touched on a little bit about the model itself and the signals that go into the model. So there's about 50 signals that are in that bottom-up stock picking model. These signals are then put into buckets. Valuation buckets, quality management buckets, sentiment from analysts, etc. We have a lot of supply linkage signals as well, and some short horizon signals. So that's important, that all those signals do create that portfolio. And what it does, it then goes into the risk model, and the risk model just takes care of a lot of any exposures like growth or size, etc. And then we have a dynamic portfolio optimization process that then, so when we're optimizing the fund, it makes sure there's no unintended bets in sectors or countries or currencies. Yep. And we have a fairly tight bound on single stock bets as well. So that's important. So at the end of the day, when you see the portfolio, you're not buying into a portfolio that has, a large bet in France and a large underweight in the UK, or a large size bet or what have you, or it's a growth style fund. That's not the case. Yep. Our skill is about picking bottom-up picking stocks, and that's important, where it's not about picking and investing in macro themes.
So there are several hundred stocks in this portfolio. What geographical markets and sectors are covered in the portfolio?
Thank you. Yes. So it's so the benchmark of the fund is MSCI ex Australia, like MSCI Globe ex Australia, ex tobacco, and special weapons. And in that fund, we invest in all global developed equities and across all sectors. So that's important. We don't invest into emerging markets, but I mentioned before that there's about 1,500 stocks in our universe. We have active bets in about 500, but we look at and analyse data from companies, proximity of about 15,000 in the globe. And we utilise that information from all those other companies across various countries that we don't invest in, like emerging markets, and they can link back to our stocks in our universe and have an effect on our stock return forecast that I discussed before. So it's important we know, so we're in global developed equity markets, we're across all sectors, we don't take any large bets, as I alluded to, in that area on those countries or those sectors, but we invest in all of them except for emerging markets.
Can you give us an example of how the systematic investing approach would allow you to add or subtract stock from the portfolio? Sure.
So firstly, as I've indicated before, we take a very disciplined approach to the positions and the way we invest. And I think, and that's no different in buying and selling, reducing positions, adding to positions. It's very disciplined, it's very data driven. So the optimization of the portfolio, which is done on a daily basis, when it absorbs all the information that we talk about in the data, it creates an optimal trade list. And that trade list will have in it, increasing positions, decreasing positions, growing, etc. So, and as a portfolio manager, I don't sit there and prefer one buy over the other or sell. So we're agnostic about that. What we're trying to do is drive those new weights into the portfolio and make it as optimal as possible at that time, based on the real-time data that we've received. And one example is maybe NVIDIA, so the big AI company in the US. It's important that when we look at NVIDIA, it's comparing itself to the other stocks in the sector. So it's really an apples versus apples comparison. We're not comparing NVIDIA to a large resource company or an industrial company. It's compared to its peers and its comparables, so within that sector. So that's important. So NVIDIA, I remember in 2022, it was starting to get some traction, but hadn't really got into the sort of the commerciality of AI. But we were looking at the stocks like we do in that 15,000 stocks that we do look at in the universe. And we had a slight underweight position in NVIDIA, and that was mainly driven through our valuation signals. The numbers hadn't really backed up where NVIDIA was trading. And the sentiment side of it that we look at within the industry and the stock hadn't really grown and got some traction as of yet. So we were mainly underweight due to our valuation signals. What happened towards the end of 2022, our sentiment signals changed quite a lot because the industry and market participants, analysts started to think a bit more positive about where AI was heading and the benefits of AI going forward from a corporate perspective. And so we closed out that underweight based on the new updates we were getting to our sentiment signals. So it sort of offset that negative in our valuation signals. Mm. And then coming into 2023, NVIDIA really got going, and so did the rest of the market with regards to AI. So, and we actually saw our valuation signals move to sort of a negative to be more benign to partly positive, based on Nvidia was starting to create and produce some good numbers to back up its share price. So from a valuation perspective, it started to look more attractive. And to go with our sentiment signals that continued to be attractive, we put on an overweight position. As the year went on, Nvidia's share price kept going higher and higher and higher. Our valuation signals came off a little bit and just dragged it down, where we end up closing our overweight. And so there's just an example of taking a large stock in the US, for example, with a lot of content, a lot of information flow, a lot of data, which we're happy to absorb, and update our signals on the go on a real-time basis. And you can see how we're changing positions from an underweight to a neutral to overweight, depending on those signals.
Excellent. And a little bit earlier you mentioned shorting, and that this portfolio does have some shorting in it. Can you explain why Vinva take that approach?
Yeah, so there's just a little bit I mentioned before. Predominantly it's got long positions, and we just use a little bit of shorting, and that really enables the model to express its high conviction stocks. So in times when we've absorbed all the information for the signals, and it's ranked all the stock returns forecast for those stocks in the universe, we might come up with some stocks that have a very poor stock return forecast. And for an example, if we had a stock in our universe that only had 10 basis points or 0.1% of a weight in the benchmark, the most underweight you could go without shorting would be 10 basis points, because you just hold no shares. So this little bit of shorting just enables us to say, that particular stock, I don't really like that stock. Forecast returns are quite poor. I'm going to utilise shorting to get it a larger underweight. So we'll go out and source stock, get a lender to borrow stock. We borrow that stock, and then we sell that stock and create a larger underweight position to really express the high conviction nature of our model.
Perfect. Excellent. That's very helpful. And are there any specific ESG overlays that are utilised in this portfolio?
So ESG is something we've been looking at since 2007. We really look at the factors within that ESG world to see if there's any detraction or adding value for shareholders over certain time periods. There's not an overlay as such. We actually just have signals like all the other 50 signals I mentioned in our model in the ESG world. So, we've had signals that about 400 actually measurements within the ESG world that have resulted in certain signals, and those signals sit in our quality bucket.
Fantastic, excellent. That's very helpful. And we've seen some really strong performance from the fund recently, which is great. Can you give us a bit of an understanding of what's been driving these returns?
Yeah, it's been a great 3 years for the fund. Long may that continue. It's been an interesting 3 years with regards to the market environment. We've had, we all know about the high inflationary environment we've had. The interest rate environment in the US particularly has gone from 0 to 500 basis points within a year. So the Fed's been very busy over there. We've had the US sort of regional banking crisis go on. So there's been a lot of things. The M7 in the US been really driving the market over there from growth and technology. So there's a lot of things been going on. So I think the reason I raise that is that's been very pleasing to navigate through those market conditions, and which I touched on a little bit before, that the model is built to be able to handle and get through due to our risk model and that bottom-up style, and neutralising the other exposure styles that I indicated to get through varying market conditions. So that's been very pleasing, I think. And what I've noticed is, from a regional perspective, the Americas has probably been leading the way with regards to performance for us, but Europe's backed up very well, and Asia Pac for us has been batting above its weight with regards to performance, which has been pleasing. But I think the most pleasing thing is that of the 25 countries we invest in, we've only had 3 that have detracted performance over the 3 years. So that's hugely important for us. And I think when you look at the signal buckets that I touched on before, we've had really good performance across the buckets, particularly in valuation and quality and our sentiment bucket. So the most pleasing thing with regards to the performance has been the spread of where we've sourced alpha across the regions and across those signal buckets. Japan has done particularly well as a country, and probably America has been the other country that's added particularly strong alpha. So I think over the last 3 years, the fund has delivered about a bit over 19% in return versus a benchmark of about 14. So a little bit over 5% net of fees with regards to return over those 3 years, which has been a pleasing result so far.
So Trent, you've given us a great understanding of how the portfolio works today. What I'd really like to understand now is where do people use the Vinva Global Systematic Equities Fund in their portfolio? How do you put it together?
Sure. So as I've mentioned, the resultant of all these signals and our risk model and our transaction model is that it results in a portfolio that has a lot of bets. So it's got a lot of breadth within the portfolio. So the analogy would really be for the cricket fans out there that on a daily basis we like to hit singles and not sixes. So it's consistent alpha over time through varying market conditions, which we really believe it places it in a core portfolio position, which is unique to others. The more traditional maybe fundamental active managers that have concentrated portfolios of 20 to 25 stocks. We're not that. We're a portfolio management systematic business that will hold a wide breadth of stocks, active positions, without any style bias, which puts us into that core position from a portfolio perspective.
Yeah, perfect. So core portfolio position delivering consistent alpha over a long period of time.
That's right.
Sounds great to me.
Thank you.
Thank you very much for your time today, Trent. And everyone who joined us today, thank you for joining too. If you asked a question that we didn't get to, then a member of our team will follow up directly after this session. If you have any questions about the fund, please contact us by calling 1300 052 054 or emailing us at invest@associateglobal.com. Thanks again and have a wonderful day.